Kia ora koutou, welcome to Shared Lunch, brought to you by Sharesies. I'm Garth Bray. We led the world in this country with EFTPOS, the ability to pay for stuff electronically by waving a card, but that was 40 years ago. And since then, maybe, have we been coasting? Have we let the major banks step back and not innovate as much as they could? Today, we're talking to a challenger. Ben Lynch is a Fintech founder keen to deliver on the promise of cheaper, smarter, less painful ways to help you handle your money. But before we get into that conversation, some important information you should always consider when thinking about investing.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Ben Lynch from Akahu, thanks for joining us here on Shared Lunch.
Thanks for having me.
Look, we started out in this country pretty cutting edge with technology like EFTPOS, the idea that you could walk in and pay for your groceries or your petrol by waving a piece of plastic at a machine was probably pretty baller back in the 80s. Have we just completely gone off the boil?
84 was EFTPOS, and we certainly haven't done a lot since then in many respects. I mean, that was ahead of its time. It is great to have a local payments network and payment switch. Increasingly, it looks like that won't happen in this country. Cards are being dominated by, Visa, MasterCard.
Because that's EFTPOS is like the state highway before they put the tollway through, right?
It was, yeah. It was a payment switch. Arguably, they just didn't innovate on, how does that payment switch operate? So, it could have moved quicker to, contactless, and it's still sort of a swipe-style PIN number, which, to this day and age, particularly post-COVID, seems archaic, right? It was, owned by the banks through the Paymark type model, and that was sold. It's hard to get agreement on should they prioritise spending in that sort of network. So, look, I think that ship sailed, to be honest, but I think there's other avenues that we can kind of innovate on. But we are a small country.
But does the way that that's happened, does that tell us a lot about what we're going to talk about today, which is open banking, which is that whole idea of, I guess, democratizing your data, making what the banks know about you, what you've told them, all your transactions, do more, right?
I mean, I think open banking does nothing else than best product should win. And so no longer, are you is this apathy around just staying with the bank you've always been with because, that was what you got given when you were, a young kid and you got your first bank account. But now, that you can kind of freely move between banks. You can, pick and choose, sort of like a telco. You can take your number with you, sort of number portability. So the promise of open banking does hopefully allow us to, banks themselves to innovate, but also other non-banks to innovate and sort of become, maybe a bank without being a bank in the regulatory sense.
Is that why I should care about this? Because, most people just want to, use their money. They want to know where it is. They want to make the most of it. They want to make the most of their futures. Do they really need to know about the plumbing in the background to all of this?
Honestly, no. It's, this is not a sexy startup. This is, this should be boring, stable infrastructure, and it is secure that just kind of runs invisibly. If open banking is in the headlines post, the kind of honeymoon phase, then something's probably failed, to be honest. It's one of those things that should just run in the background like the electricity grid or the fibre network from Chorus. It's just a piece of infrastructure, a digital piece of infrastructure that and certainly in my opinion, in our opinion, should be owned and operated for the benefit of New Zealanders as well.
But it's not right now?
Well, it's always been, it hasn't been regulated up until the 1st of December this year, and we'll get into that a little bit later. So it's always been a sort of a backdoor kind of reverse engineered approach to creating these open banking type services so that other products can use them. And, in this country, the most, kind of obvious use case for sharing bank data is, pioneered via Xero.
I was going to say Xero seems to me like the logical one.
Look, if you're a business and you can, the value prop of connecting your bank statements and your transactions overnight so you can reconcile the next morning is pretty clear, right? So it kind of just democratizes that and takes it 10 steps further.
I grew up in a house where we had small businesses and, Sunday night Dad would be sitting there doing the books. And yes. I now spend like 10 minutes on a phone going bip, and it's all done. And that seems like a massive step forward. Is that the kind of thing that we're bringing to everybody's lives with this kind of technology?
It is. And it's almost, I used to work at Xero and I was in the bank feeds team. So I sort of know it intimately well, and essentially where I sort of kicked off this whole journey. So it's almost the way I think about it is if Xero Bank Feeds was a product and a company in its own right and served more customers than just Xero. So it's that connectivity layer, shared infrastructure layer that, personal finance, accounting, tax, investment tools, mortgage brokers, if anyone that needs access to your financial information can get access securely and then share it, for those purposes.
Well, let's take the Sharesies app, for example. I can look at that. I can go, how much have I got invested in a portfolio?
Yep.
What's in my KiwiSaver? I can make sort of one-off, very quick payments, instant payments, basically, and transfers. What other kinds of things are going to turn up on the dashboard as this evolves? Do you think?
Absolutely.
Theoretically.
I'm a big Sharesies fan. I think you can, like you said, reference the KiwiSaver product now. There's a MasterCard debit card now you can get with Sharesies. So it is becoming more and more of your kind of primary financial relationship. But you can also choose through open banking to say, well, actually, I want to keep my ASB savings account. I actually want to keep my whatever bank KiwiSaver or non-Sharesies KiwiSaver, but I want to see it inside of Sharesies. And so I can log into one place and I can see all my accounts, and I might bring my mortgage across with me. Now, it's still held with the underlying bank and I still go to them to change rates or do whatever, but I can see it all in one place. And that's kind of the promise of open banking, is to bring all that stuff together.
Just the dashboard? You can't actually do anything with
No,
it?
you can do things, yeah. So you can make payments, is sort of initiations. So you can make payments essentially from your ASB account inside of Sharesies to pay a bill.
So at some point you probably stop having a relationship maybe with your bank. They're just a commodity, right? And your main relationship might be with whoever controls that app.
I think that is the race to who owns that kind of top of the wallet type thing. And so
Can't imagine why the banks don't want that to happen, Ben.
No, look, banks are...
We've got this exciting new product that takes your customers away or puts somebody between you and them. Like, most businesses are going to fight that tooth and nail, aren't they?
Yeah, look, they have resisted it for a long time. But it was always obvious to me that, eventually there would be regulation that would force, for a competitions aspect, to do it. So it was just a matter of time. I didn't think it would take quite this long, but from 1st of December it is the law.
So what happens on the 1st of December?
So from the 1st of December, essentially we have consumer data right in New Zealand. So essentially that's a piece of legislation that says you as a consumer own your data, and if you want to share that data with a third party, then that's your right.
But the Privacy Act says that's the case already, and I guess so does my understanding as a journalist using the Official Information Act. I get it. But it's how you get it, right? If you write to some minister or some government department and say, I want a list of X, Y, and Z, they will send you a PDF that's impossible to search, right?
Totally.
Is this about getting it in a way that you can actually do something with it?
Yeah, you're right. So there's the legislation, which is the consumer data right. And then under the legislation, it's pretty high level, which is good because it's going to sit across a lot of sectors eventually. Now, open banking is the first sector to be designated essentially. So that's where you mentioned the regulations kick in. There's some standardised ways that the banks are making that data available to you, and it's essentially via APIs. So the ability,
What's an API?
Application Programming Interface. So the ability,
this is more plumbing jargon.
It's plumbing jargon. So ironically, actually, when I first started talking about this back in 2016 to some bankers, it was a very new term, not in the tech community, but certainly in the banking community. And, half the time I wondered whether they knew the difference between an IPA or an API, to be honest. But things have moved along,
Many IPAs later.
IPAs later, we have APIs. And so that's essentially from the 1st of December, these APIs are made available via the bank securely, and then for third parties to essentially act on top of those and with your consent.
Because up until now, what basically apps have been kind of screen scraping?
Scraping, reverse engineering,
sort of give us your login
impersonated
details.
access. There's all sorts of things you could call, right? Poly's been around for a long time, obviously.
One reason I never use it, because the first thing it says is, can you please just type in your bank password? I'm not telling you my PIN number. This is the one thing they tell you not to do.
It is. But it's one of those things that, a substantial portion of the country have used it, and even more so overseas. And when the value proposition is clear, then people tend to, I guess, forego a little bit of privacy for that convenience factor, which is not necessarily a good thing, but has always been done.
But they shouldn't have to.
They shouldn't have to, and they won't have to, from the start of next year going forward. But, one of the other big use cases, if you go to a mortgage broker and they say, hey, can we get access to your bank statement so we can figure out whether we can, someone will lend you $1 million. And so generally that's another service that would jump into your online banking portals, grab all your bank statements, and then they'll run them through some sort of enrichment process to figure out your kind of expenses and income.
And this will just basically do that without you having to say password is whatever, login
exactly.
is whatever.
So the consent sits with you and your bank sort of thing. So, much the same way you might want to connect your accounts, and then you'll say, clearly what you're doing. And then to initiate that final consent level, you'll normally open up your banking app and you're in there, there'll be the consent that says, yes, I agree to this company having access to my data under these terms, and then I can click OK. And then in that banking app, you can always review those consents at any time. It's auditable, and then you can revoke them whenever you want. So you're kind of fully in control.
People say that.
Well, yeah. But no, it's a huge upgrade, and I think.
Are we ready for it? It sounds like,
we are.
The RBNZ just stress tested the banks and said, hey, by the way, you need to look at your IT systems and whether they could handle a variety of different pain points, like a third party who can't handle it, or you forgot to upgrade something, or you did it badly. Mm-hmm. Isn't that kind of low-key the Reserve Bank telling banks, you guys need to lift your game big time?
Yeah, I mean, banks have had a lot of compliance thrown at them in the last, post-COVID sort of thing. So this is one of those big areas that they've had to meet and spend a lot of resourcing and sort of particularly with their IT teams and security teams around making sure they're ready. And so, it is. I think the easiest way to think about it for banks' perspective is just another channel. So, originally we had, the branch channel, and then we came along with some ATMs, and then there was kind of the online channel, and then there was a mobile channel, and now there's kind of open banking channel, which essentially just, is another way to think about how they serve their customers. And, for a lot of banks, the question will be, are we best positioned to be the front and center, company that delivers that product, or are we more of an infrastructure, compliance, AML, secure deposits type company, which is very valuable.
Right, checking out you are who you are, which is another big pain point, right?
Totally,
anytime you want to borrow something, invest in something, onboarding to Sharesies, onboarding to anywhere, you need to go through a whole lot of this.
There's a piece of shared there's all those things, and that's kind of the layer that we sit at. And when I talk about shared infrastructure, open banking is one, but there's a lot of other areas that will most likely will go into as well. So if you think about,
I never have to use Real Me again. Sorry, Real Me.
Look, digital identity trust framework is another piece of legislation that's coming, another piece of tech that's coming to this country, and that is essentially Real Me V2, kind of maybe not built only by the government and more by the private sector. So a bit more of solving actual problems. But essentially it is the same thing. And so there's a lot of foundational building blocks, if you like, before even Sharesies could launch an app. And one of those is AML and then, all those other things. So that's kind of at our layer. We handle all those common shared things. So
that's anti-money laundering, by the way.
Yeah, sorry. Yeah. And all those things that generally, you verify who you are, all those kind of things that we handle kind of at an infrastructure layer, so that companies like Sharesies and others can get on top of building those products for their customers instead of all that kind of shared stuff that just really gets them to the start line.
Yeah, just doing it all over and over again, I suppose, any number of times. Look, I am hearing a lot about surcharges and the amount you have to pay. Is that kind of a distraction? Is that like the fight that, if you're cynical, perhaps the major banks would rather we're arguing about whether or not you're doing PayWave and whether or not the merchants should be charging for it, rather than all of this stuff?
Yeah, look, I think surcharging is a bit of a distraction. And to be honest, I think I fully approve of the banning of surcharging, and I think it's May next year. I mean, I think it's a cost of doing business. If you look at, I think there was a study a couple of years ago on the cost of accepting cash, and it was somewhere around 4.7 to 5%. You'd be laughed out of the store if you handed over $20 for your ice cream and they tried to surcharge you in the cash. Surcharging really only came about sort of in this country at a mass scale level around COVID, if you remember, with the kind of the QR codes and the whole we don't want to touch money type thing. And it was kind of left on and it just never disappeared. And so
it's like tipping, right?
Yeah, exactly. And so, look, people do conflate surcharging with open banking, but they are very different things. And surcharging is very much related to your merchant, services fees, and that's generally tied to your, acquiring model with, Visa and MasterCard and whole different things. So open banking is kind of the opposite of that, where it's just unlocking and unleashing, enabling the existing payment rails that we already have. So a payment in open banking land already moves between, already have an ASB account, you might have an ANZ account. We already have bank account numbers. We just remove the friction of having to remember them or share them or any of those other things.
Right. I'm just sort of wondering, I mean, one of the criticisms I've seen about these rules coming in that you talked about in December are that it's been set up in a way that there's no charging for it, right? That the consumers don't get charged for this. But some people seem worried. At the same time, you're saying, get rid of surcharges. There is no kind of surcharge on this, and that's going to make it more difficult to bring it in?
Yeah, look,
walk me through that.
I don't get that. I don't prescribe to the fact that, no other country that has legislated open banking charges for your raw data. So this is just your raw data. So your raw account balance and your transaction level detail that
So
you
that's
might
fine.
see in a statement.
You think that's good?
That absolutely should be free. There's an argument to say that we could have a small couple of cents, 1 cent, 2 cent on a payment because, as we referenced earlier in the conversation about FPOS, if you underinvest in a payments network, then generally it disappears, sort of thing. And so that is also the banks can't charge for that.
So you've got to give the banks and everybody else sort of a reason to play the game.
Yeah, absolutely, and keep investing in this. And we're certainly working with the banks, multiple banks around a premium model. Are there some non-sort of legislated APIs that they can deliver? And we're more than happy to work out a revenue sharing model with them because we think that certain use cases could afford to pay a small fee and certain other use cases couldn't, sort of thing. And
but
so,
what are we talking about if you're getting a big product? Or
so if you're like a big consumer product and have a huge customer base, just connecting your bank account data to see your balance and your transactions, say in Sharesies, there's little value. A customer's likely not going to pay for that in Sharesies as an extra if that was a cost on Sharesies. But if you're a business and you're offering an accounting solution or a tax solution and there's, much more kind of impetus to pay for that service, then, a small fee can be passed on, sort of thing. So we kind of think moving the charging or the fee model to the kind of infrastructure or the intermediary layer better suits working with banks on a partnership type model is probably where it will land and kind of where we're working towards.
Right. Does this whole technology, what sort of a foot in the door does it give to fintechs to actually try new things?
Yeah, I think it's a huge shot in the arm. I think, I've always said, how can you be a bank without being a bank? Because, becoming a bank in New Zealand is, when was the last bank? It's hard.
It's like calling yourself a doctor. It's actually, it's regulated, right?
Totally.
There's limits on
and
what you can do.
It takes
There's
years
rules.
and years and years and a whole bunch of cash that is just not available in this country. And so, in a lot of respects, if you can be your customer's primary financial relationship and they think about banking with you, even though you're not a registered bank, then I think that's a really valuable position to get into and probably really enviable from a bank's perspective too, because there's some really cool things that you can add value and charge for. And, you can still do, Sharesies does investments and they do KiwiSaver and there's, plenty of non-bank lending, in the mortgage market as well now with KiwiSaver funds growing. And, so there's a lot of people tackling those kind of banks' core propositions. And someone that can deliver a really cool user experience and, a really strong customer proposition is really going to do well in that space. And open banking enables that.
I guess at some point people might even want to be lending peer-to-peer and sort of, leveraging their portfolio and doing all kinds of crazy risky things.
You kind of, to some respects, open banking is great because it's been legislated, the banks, here's the rules, everyone knows what the rules are, and then just get out of the way and let the market do it. Let the market, good products come to market. And
but are the banks going to only do the bare minimum to qualify?
The bare minimum achieves a lot. And so I think it will be, banks by definition kind of all compete against each other, right? Particularly the big four banks, and then you throw in Kiwibank. And so I think you'll see some banks say, well, we think this is a really valuable channel for the future. So we're going to innovate in the space and we're going to offer more business APIs or some other APIs that only our customers can access to, do whatever they want to do. So I think you will see a lot of competition and kind of innovation from the banks eventually. But certainly at the moment and kind of certainly into the new year, banks have just been head down meeting the regulation.
So I'm just thinking it feels like, an app like Xero came here, it's just cleaned up really well. It's got quite a lock on the market. Mm-hmm. We tend to sort of have one of everything here. It feels like, is there someone going to come in and just with the solution and everybody else is going to just forget about it?
Certainly at the infrastructure layer, in terms of what we do, it is kind of a winner takes all. There's only, like you said, there's one Xero for a reason, there's one TradeMe for a reason. The market's just not that big here. And so, there's only one Chorus for a reason. There's only one Transpower for a reason. All of these things that operate kind of a grid or of sort of a network where other people plug into, the market is just not big enough to sustain more than one. And so
do you wind up having to look around and go, oh, how do we do the same thing in Australia? How do we do it in other kind of markets? Or is it too complicated?
It is too complicated. We've decided to focus solely on New Zealand. We think we can do New Zealand really well. And ultimately we don't think we are probably the long-term owners of this business either. Like, we do think it is naturally probably a group, a consortium of industry players that own and operate this piece of infrastructure.
Some big KiwiSaver fund or something.
Exactly. Like, there's a lot of, it could be telcos. There's lots of people in this space now that would have, an advantage to co-owning this piece of infrastructure instead of renting it. Because remember, they're customers as well. So, banks will be the first to say, which bank's going to show other bank accounts inside of their bank interfaces. So as much as they produce the APIs, they will be certainly very eager to consume APIs from other banks so that their customers get the best experience.
Right, but who's going to show their cards first kind of thing.
Yeah, and I think we'll see an interesting space evolve next year.
Yeah. I guess at some point, is this agentic AI, that kind of stuff, is Siri going to take all this sort of stuff with an API for me, or is do you hand that agency over to somebody else?
Yeah, look, I don't think so. Like, I still think money and your finances is still a pretty important part of your life, obviously, and there's a lot of trust that goes with that's built up over a long period of time. And look, banks still have a credible, and a well-earned amount of trust in society. Now, you might sort of, have an opinion on whether banks should be owned by offshore entities and all those sorts of things, but that's beside the point. They do look after your money well, and they know how to secure your data, and they do a really good job at that. And so, I think there's a lot of interesting spaces that will evolve outside of that, but ultimately, where do your dollars sit, and who holds on to them, and who do you trust to ultimately give $100 and know that you're going to get the $100 back when you need it? It's always going to be a bank.
Sounds amazing. You've never worked in a bank though yourself.
I haven't worked in a bank. I worked for Xero.
You blagged your way in there, didn't you?
I
Let's
did.
be honest. Can we hear that story, please? Because I heard it once.
I was working. I grew up down south in Narrowtown, down in the South Island, and I was working on a golf course at the time. And
family business, I understand.
It was a family business, and I got a wife and kids and a mortgage, as you tend to do, and I thought, actually my wife made me, let's be honest. She told me that I need to go and get a real job, so I was always interested in technology, and I didn't have any qualifications. I would sort of build websites on the side. This is back in 2012, 13. And so I thought I'd sort of started building what now became Akahu way back then even. I'd sort of reverse engineered access into my own bank account so I could move money around automatically to avoid ASB's overdraft fees at the time. And I thought, if I want to do something with this, I need to go and learn from someone. And at the time, Xero was obviously just taking off. And so I sort of stumbled across a tweet that Rod Drury had said, the founder and CEO of Xero, and I mocked something up and I sent it to him, and 30 minutes later he kind of offered me a job sort of thing. And so I moved to Wellington and worked for Xero. And look, Rod's someone that appreciates innovation more than anyone, right? And doing things differently and sort of sticking your neck out.
But you went into it knowing, I don't actually want to work there. I want to learn how you guys do this.
I did, and I remember telling him, I'll be here for maybe 12 months, 18 months, and I'll learn as much as I can. He probably laughed. He thought, oh, whatever, mate. But that was always my goal, to go and learn from, at the time, the New Zealand's best, and sort of understand how SaaS works and how you build a product and how you get customers and how you market and all those things. And so after that point, around about 18 months as well, I was able to I went and did a little bit of time at Xero, which is a company up here in Auckland. And then I got to a point where I could raise money for essentially what I'm doing now, and away you go.
Do you feel like your patience is being rewarded?
It's been an overnight, 10-year overnight success, as a lot of people would say. And, it's one of those things, if I'd known how long the regulation would take, which we always knew we would need that regulation to get the tailwind, to get these sort of past the early adopters. I didn't think it would take 10 years. I mean, I think I was counting up the other day, it's 8 consumer and commerce affairs ministers later. We've ended up with some really good regulations that should enable the network and consumer data right to grow. But it's like, most people would say, if you knew what you were getting into when you started, would you just do it? And most people would probably say, nah, I'll go and get a job at a bank maybe.
40 years from now, what's it going to look like? Any ideas?
I just think that's far too long to push out into with everything going on technology at the moment. There'll be a lot more competition. There'll be a lot more compelling reasons to switch providers. But I still think we're a small country, and with a cap of 5 million odd people, there's only so much innovation and so many financial products that can come to a market this size just because of the limit of that ceiling. And so, it's unlikely that some of the big overseas kind of fintech banks really have a market share here, because there's just not enough people here. So I think, one of the things that will be interesting over the next 40 years is, where New Zealand decides to play in terms of, do we want to remain a small island in the South Pacific with 5 million people, or, do we have the capacity to get to 30 or 40 million people, which enable everything else on top of it? But, who knows where that ends up? That's well above my pay grade.
A lot of traffic in Arrowtown.
There would be a lot of traffic. There already is a lot of traffic in Arrowtown.
Hey, Ben Lynch, it's been fascinating hearing your passion for something that most people probably don't even want to think about, but will actually potentially change how they look at their money, how they handle their finances, and how they transact. That's pretty fascinating. I hope you enjoyed the chance to share some of that, and I hope you all enjoyed the chance to listen and watch, whether you're watching on YouTube or listening on any of the apps, straight off the Sharesies app, iHeart, wherever you get it from. That was Shared Lunch. Ko mutu.